Imagine standing in a room with 100 people, all holding the same investment. Now, imagine 97 of them are staring at their screens in absolute despair because they are currently losing money. This isn't a hypothetical horror story, it is the cold, hard reality for Algorand holders in 2026. Today we are diving into one of the most polarizing questions in the crypto space. How much ALGO do you actually need to become a millionaire? We aren't just looking at hype or moon emojis. We are analyzing the brutal 97% underwater statistic, the sudden 170% volume spikes that are catching analysts off guard, and the technical W-shaped bottom that suggests a massive reversal is coiling like a spring. By the end of this video, you will understand the realist versus moonshot price targets and the exact math required to turn a modest bag into a seven-figure fortune if Algorand's boring but essential infrastructure finally takes over the global financial plumbing. Is 97% failure a sign of a dead project, or is it the ultimate contrarian by the blood signal? To understand where we are going, we have to acknowledge the max pain of where we've been. Algorand has been described as a stalled engine, or a sleeping giant, that has been trading sideways since the 2022 World Cup. 4 years, the price has been dead in the water, leading most retail investors to write it off as a relic of the past. This price destroys perception phenomenon means that because the token value fell from nearly $3 to pennies, people assume the technology must be failing too. However, in the world of professional trading, extreme retail exhaustion, where almost everyone is losing money, is often viewed as the ultimate signal that a market bottom is in. When there is no hype left and paper hands have already panic sold, the market becomes light and ready for a potential move to the upside. We are currently seeing a battle between those who see a zombie chain and those who see an undervalued infrastructure play waiting for a macroeconomic pivot. While you're checking your portfolio in despair, why are the world's biggest financial whales writing their largest checks of the year? While the retail crowd is demoralized, the smart money appears to be doing something very different behind the scenes. Recent on-chain data shows a massive surge in average order sizes, suggesting that high-net-worth individuals or institutions are quietly loading up. This is confirmed by the cumulative volume delta (CVD), which acts as a lie detector for price movements. Currently, we are seeing a taker-dominant phase, meaning aggressive buyers are outpacing sellers and absorbing the available supply while the price remains relatively flat. This is the classic institutional accumulation phase. These whales aren't buying for a quick flip. They are positioning themselves for a future where the world's financial plumbing moves on-chain. They see the Wyckoff accumulation model playing out, where the price is tested repeatedly at the 8 cents to 11 cents support level to flush out the last remaining sellers before a potential blue sky breakout. Can a blockchain really survive on math alone, or does it need the world's most popular programming language to finally wake up? The reason these institutions are interested isn't just because of a chart pattern, it's because of the engine under the hood. Algorand was created by Silvio Macaulay, a Turing Award winner and MIT professor, to solve the blockchain trilemma of security, scalability, and decentralization. While other chains struggle with high fees or downtime, Algorand offers 3-second finality and costs a fraction of a penny per transaction. A major catalyst for 2026 is the AlgoKit 3.0 launch, which finally allowed the millions of Python developers worldwide to build smart contracts easily. There is a lag effect between when developers get the tools and when the apps actually launch, and we are now entering that window where the ecosystem should begin to bloom. Furthermore, Algorand has quietly captured a 70% market share in real-world asset tokenization, moving over $268 million in tokenized stocks. From the Afghani-denominated stablecoin, Hayfen, to USDC integration on Kraken, the network is becoming a high-speed rail for digital dollars. We've seen the tech and we've seen the whales, but now it's time for the only question that matters. What is the price of your freedom? Now let's get into the millionaire math. To hit that 7-figure goal, we have to look at 3 distinct scenarios. The conservative realist target is a move back to the $1 mark. To become a millionaire at $1, you would need to hold 1 million ALGO tokens. This target is based on a measured move from the current W bottom and a recovery of previous high-volume nodes. The bullish cycle target suggests a run to $3, which would mirror the market cap success of competitors like Cardano in previous cycles. At a $3 price point, you would need roughly 333,333 ALGO to reach the $1 million mark. Finally, we have the 2030 Moonshot target of $5.65 to $7. This scenario assumes Algorand becomes the boring but essential global infrastructure for central bank digital currencies and tokenized treasuries. At a $5 price, you only need 200,000 ALGO, and at the high-end $7 target, just 143,000 ALGO would secure your millionaire status. In a world of noise and hype, will you follow the herd into the red, or will you stand with the infrastructure that runs the future? The journey for Algorand hasn't been easy, and the path to 2026 is still fraught with macroeconomic volatility and geopolitical word generator headlines. Whether it's the Federal Reserve shifting to quantitative easing or the quiet accumulation by smart money, the signals are suggesting that the sleeping giant might finally be stirring. This isn't about chasing the next memecoin pump. It's an asymmetric bet on the future of financial infrastructure. Capital preservation is always the priority, but for those who believe in the 70% RWA dominance and the power of pure proof of stake, the Millionaire Math is now clearer than ever. Stay focused on the data, watch the 80 cents blue sky breakout level, and remember that in crypto the biggest gains often come after the period of max pain. If you found value in this deep dive, make sure to hit that like button and subscribe. Staying updated with the latest on-chain insights and institutional trends is the only way to navigate this volatile market. Drop a comment below. Are you a realist or a moonshot believer? We'll see you in the next update. Take full control of your crypto with Ledger Live. Manage thousands of coins and NFTs securely in one place. Buy, swap, stake, and grow your portfolio with ease. Trusted by 7+ million users, Ledger Live keeps your assets safe by integrating with Ledger hardware wallets for maximum security. Say goodbye to third-party risks and hello to true financial freedom. Download Ledger Live now. Click the link in the description to get started. Crypto taxes don't have to be a nightmare. Coinly calculates your taxes in under 20 minutes. No spreadsheets, no headaches. Sync your crypto assets with one click. Whether you're trading, staking, or using DeFi, import your trades, track your portfolio, and generate ready-to-file tax reports effortlessly. Join thousands who trust Coinly to simplify their crypto taxes. Make tax season stress-free. Click the link in the description to get started with Coinly today. The information contained herein is for entertainment purposes only. Nothing herein shall be construed to be financial, legal, investment, or tax advice. The content of this video is solely the opinions of the channel owner, who is not a licensed financial advisor or registered investment advisor. Trading cryptocurrencies poses a considerable risk of loss. Please use your best judgment when dealing with cryptocurrencies and don't invest money that you cannot afford to lose. The channel does not guarantee any particular outcome.